Guys, it is now coffee time. A day trader just turned $35,000 into 1.25 million. So let's find out how he did that, and also I'm going to tell you about something tragic that happened. We are going to talk about 6 lessons that you must learn from Corona time day traders. Let's talk about that right now, coming up. You heard of freaking egoistic day traders. You heard of sad stories, people who took their lives away, which is really sad. 2020, what an emotional roller coaster. Now, first thing first, a day trader on Reddit claimed they made 3,500% gain. I think if Warren Buffett see this kind of ROI, he'll be like, damn. Then you know those hedge fund managers, they are like making 20% a year, right? But I don't think they'll be super impressed because gains doesn't really tell much. Like, you need to understand the whole context, like what the risks you're taking and all that, okay? Let's get into the details, okay? This trader by the name of Mori226, he said that he had an insane wild ride. Wow, so exciting. Like, it's just like going to theme park, you know. Through 350 trades beginning from March, meaning he started taking a roller coaster in around March. And then he said that his biggest winning bets came from Nikola Amazon, which I recommended you guys, Amazon. And he also said Disney and Apple. Apple I also recommended you guys to buy, which I don't know how many people took action. I guess not a lot. Now, do you realize one thing? The media likes to post this kind of headlines like, oh, this trader turned 10,000 to 2 million, 3 million, 4 million. And why do they do that? Because if you're a journalist, you are paid more if you get more views, if you get more clicks. So if you publish something like trader loses $10,000 account, I think your boss would be like, this is your last week, okay? Trader turns 1,000 to 20,000 to 50,000. This kind of thing, it grabs attention. But then the problem with that is beginner traders, when they keep seeing this kind of headlines, they be like, oh my god, I really can get rich quick from trading. I really can do that. Because the media doesn't publish those people who lose $10,000. Now, the good thing about this trader is that even though he has such a big gain in such a short period of time, he actually did learn something from it, because he says that, you know, if you've got a losing trade, try not to beat yourself up over bad trades and mistakes. And he also says that you need to let the winners ride and focus on what's left in the account to climb back up. And I agree with him, because a lot of traders, they don't let their winners ride enough. They see a little bit of profit, then they take profit really fast because they're scared that their unrealized profit is going to turn into losses. A lot of traders, they focus on, oh my god, I lost $1,000 out of my $10,000 account. They focus on the $1,000 loss, but they don't focus on what is left in the account. Like, your $9,000 is still there, right? So I feel that this is a good point. Almost within the same period, just a few days ago, which is around the same time, amateur investor turned $15,000 into 1 million. Wait, there's more. Then lost it all. The latest cautionary tale in the day trading frenzy. 95%, in fact 99% of traders who achieve massive fast growth because they just want to get quick returns. They don't care about their risk exposure. When you trade like this, it's only a matter of time before your account gets blown up. Of course, the 1% who manage to sustain that are the pros. By pros, I mean the hedge fund managers who know what they are doing. So this trader who lost $1 million, he is again a Robinhood user. Robinhood again. Now, he said this one thing, okay? He said to New York Times, they make it so easy for people that don't know anything about stocks. Then you go there and you start to lose money. Now, because in this industry, there's conflict of interest, massive conflict of interest between service providers. By service providers, I mean like brokers. They reduce the barriers of entry so that it's easy for you to open an account, and not only easy for you to open an account, but they give you like, okay, rewards, bonuses, presents, when you open an account with us today. Like, no, everybody loves presents, right? Christmas presents, and then like free stuff. Like, who doesn't like free stuff, right? Most brokers do this not to benefit you, but to benefit themselves, because they know that most traders lose money. And the second thing is that the more you trade, the more money they'll make. And please don't do this, okay? This trader, I would say pretty young, 31 years old, funded his account by taking out 15,000 credit. Not only that, and 30,000 home equity loans to fund early losses. He turned those loans and credit into about 1 million, he told the Times, but within months he lost almost everything, with only 6,956 left in his account this week. A lot of sports events are cancelled, and hence sports betting is like stopped for a while. A lot of these people, they turn into stock market to make quick bucks, to gamble the stock market. So this means that most of them don't know what they are doing. If there's a planet for traders, I can tell that professional traders, they live on another planet. Retail amateur traders, they live on another planet, and I believe that you don't want to be on this planet. And the worst thing is that there are so many people popping up on YouTube with zero finance background, and the worst thing is that people watch them because you know why? They promise get rich quick. People who talk about boring stuff like risk exposure, like lot size management, boring. You know, these kind of people, will just let them learn it the hard way. Then eventually they'll find out like who really wants them to succeed. Now the billionaire traders, they did give some comments. Amateur investors speculating on stocks have pushed markets skywards, but angered some of investing's biggest names. The big names in the investing world. I don't know why his photo is over here, but I get that, you know, because he is the captain, okay, of day traders. He's better than Warren Buffett, okay, so respect the captain. But I really want to talk about the billionaire's opinion on this, okay? Leon Cooperman says that they are just doing stupid things, and in my opinion, this will end in tears. Howard Marks, co-founder of Oaktree Capital Management, it's not healthy to have people buying stocks for fun. I agree, totally agree. Like, if your life is so boring, then you need to put your hard-earned money or money you don't have into a stock market just so that your life is a little bit more exciting. I give you one alternative. Go to the casino, because you know the casino, the machine, like it's so many colors, then it's so bright. It's way more fun than sitting in your room and then clicking a mouse. The machine is more fun, I tell you. Now Warren Buffett didn't really give an opinion about these day traders recently. In fact, he's been quite quiet recently. But in the past, he used to say things like, okay, try not to speculate too much. Don't confuse day traders with serious investors. I think the reason why he didn't comment is because he's so fed up of seeing stupid day traders over his past like many years of investing. I think he's seen enough. Then he's like, okay, not again. I don't want to comment, okay? One of the main difference between retail traders and pro traders is retail amateur traders, they really like to day trade and then scalp. Like the small time frames, they really like it. Like, you like small things so much, right? Go and buy a microscope, look at microorganisms, and then hopefully find a cure for coronavirus. So what are some of the lessons that you can learn from these corona time day traders? First lesson is, if you don't spend 2 to 3 years putting in the patience to learn this thing properly, you're gonna spend the next 2 to 3 years crying, regretting. You cannot spend 2 to 3 years learning stuff properly, but you can spend like 40 years working for somebody else, making the CEO rich, and then retire at 65. It doesn't make sense. Then the second lesson is, don't get sunk into free platforms just because of easy access. Just now I already mentioned why. Because in this industry, there are conflict of interest that a lot of amateur retail traders don't see. They think that the broker are here to help them succeed. Okay, some brokers are good, but those with conflict of interest, for example, market makers, they trade against you. A lot of retail traders don't know that. Now, third thing is, don't overestimate your ability, your competence, your skills. Now, confidence is very good, but arrogance is going to kill you. Okay? What you need to do is to constantly doubt, challenge your own opinions. Next thing is, don't trade products, assets that you don't understand. I already mentioned why just now. Even Warren Buffett have said this before. Don't invest in something that you don't understand. I don't care if I recommend it or if somebody recommend it, you gotta do your research. If you don't understand something and you invest into it and you trade into it, you're going to have some confidence issues. When you're not confident about things, you start adjusting things. You'll be like, okay, maybe my stop loss should be here. Oh no, maybe it should be here. Then the price move a bit. Oh no, maybe it should be here. This just shows me that you're not confident. Next thing is, you already know this, don't gamble and don't borrow money to gamble. Unless you have a lot of money to spare, then feel free to do that. And the next final thing is, don't make impulse trades. And these kind of traders who trade with impulse, I feel that they don't really have a trading plan. And do you know why most people, they don't like having a trading plan? Because having a trading plan might cause them to miss some trades. Because when I have a trading plan, okay, I only trade when the market conditions are like this. Then when you see a trade that other people are making that is not according to your trading plan, you are going to miss out. That is the so-called price of having a trading plan that a lot of people are not willing to pay. Yes, you might miss out some trades, but you know what? In the long term, you are going to make money. If you don't have a plan, cool. Then you can go into any trade you like. You can trade anytime you want, but the price to pay is you are going to blow your accounts. So my question to you is, what kind of price are you willing to pay? Now, if you are new here, you want to learn stock market from basics properly, you don't know anything about stock market, I've done a lesson in the past. You can go and check it out. And if you want broker recommendations, I'll put it in the end screen later. So with that, I'll talk to you in the next video. Bye.